Hello and welcome to episode 2 of the Asian Insider. I'm Nirmal Ghosh. On this show, we dissect global issues from an Asian perspective, asking the unanswered questions and seeking the difficult answers. And for this second episode, we will be discussing the tariff and trade wars engulfing news cycles across the world. Joining in today's conversation will be two of our Asian insiders, Danson Chong, our China correspondent in Beijing, and Vikram Khanna, associate editor at the Straits Times based in Singapore. But before we speak to them, let's first hear from the man at the heart of this tariff and trade war between the United States and China, America's President Donald J. Trump.
Somebody had to do it, so I'm taking on China. I'm taking on China on trade. And you know what? We're winning because we're the piggy bank. We're the one that all these countries, including the European Union, wants to rob and takes advantage of. European Union, $200 billion. China, more than $500 billion.
So there you have it. Now, the somewhat triumphalist view from the China hawks in this town is that China is on the ropes and the so-called decoupling of China from the US is already underway. The counter view is that the Trump administration has underestimated China's ability to take the economic pain. Now, it is interesting here to remember that while China's tariffs on the US have been going up, its tariffs on non-US imports have actually been going down. At home in the US, while President Trump insists it is China that is paying for the tariffs, certain trade-sensitive sectors are hurting, and there are growing worries about a recession. Now, the economy is strong, no doubt about that, but there are some tiny red flags. The Federal Reserve, for example, reduced interest rates about a month ago because it saw manufacturing slow down. And in July, new home buying fell sharply, which indicates a lack of confidence. The latest round of tariffs in and of themselves may be somewhat moderate, but the head-spinning rhetoric does not help. It is uncertainty that is really bothering the business sector and the markets. The political question for President Trump at home is whether he can keep this economy going through the 2020 election season. A deal with China will look good and restore confidence, but would be risky if it is only half-baked. Remember, this is not just about trade. It is about a geopolitical realignment as well. But we'll get to that. First, let's go over to Danson Chong in Beijing. So Danson, what's the perception of the general public in China to these hikes? And which way is the wind blowing for President Xi Jinping in particular? Could you speak to that as well?
Well, among the general public, it sort of sparked a wave of nationalism. A lot of Chinese have a great amount of national pride. They feel that this is China's time in the sun. And the Americans, are getting insecure. Of course, some of this is because of propaganda, but, it's led to things like people buying more Huawei phones, and I think also greater support for the Chinese leadership. But there's also a group, who feels that the pressure from the US is causing China to make some of these much-needed reforms, like with the foreign investment law, which was passed this year, more intellectual property rights protection. In fact, there's a joke, that's going around that two old men have brought reforms to China, Deng Xiaoping and Donald Trump. But, you're right in saying that Xi Jinping cannot afford to look weak against this pressure. He's preaching, this vision of a strong and rejuvenated China. And if he's seen as capitulating to US demands, that's going to affect his political legitimacy. The line we've been hearing these past few months is that, China doesn't want to fight a trade war. It's not scared of fighting, but will fight if it has to. Just a couple of days ago, we read in the People's Daily that China is saying it will fight to the end. So, Xi is determined that he does not look weak in this exchange.
Are there any job loss estimates there? How are Chinese business and consumers coping?
Various economists estimate that between 1 million to 2 million jobs have been lost so far as a result of the trade war. It might sound like a lot, but then you have to bear in mind that the Chinese labor force is something like close to 800 million strong. The government has tried to cushion impact with tax cuts for businesses and subsidies. But still, manufacturers, both local and foreign, have closed factories in China, moving them out to countries in Southeast Asia. But the trade war is becoming a big worry. Uncertainty is causing consumer spending to drop. This is a big deal for China because it's counting on consumer spending to drive growth.
So is it true that China is hurting more than the USA, like President Trump has said?
I think we're talking about different kinds of pain here. China is feeling the economic pain. Economy is growing in the slowest rate in about 27 years. The US is the largest export market for Chinese goods. And although the Chinese economy is shifting gears, for a long time, Chinese growth has been export dependent, right? But as for whether it's hurting more than the US, I think that's debatable. The Chinese are betting that its growing domestic consumption will take some of the sting out of the trade war. It has the biggest middle class of any country in the world. And like I said earlier, Xi cannot afford to look weak. So China is giving as good as it gets, I think. Since the first tariffs were imposed by Trump in July last year, it's responded in a tit-for-tat manner. Practically speaking, it cannot match the US dollar for dollar, because it imports from the US like a quarter of what the US imports from China. So it's been forced to be very targeted in its tariffs. And the latest round that we've seen, the 75 billion, goods like crude oil, soybeans were targeted. They also resumed tariffs on US auto and auto parts. And these are all designed with the 2020 presidential election campaign in mind, to inflict the maximum amount of political pain on Trump.
Absolutely. So, given what is at stake, which is far more than trade, what do you see happening in terms of a deal?
Given all that has happened, I think nobody is going to put their money on this. Like you said, this is far more than just trade, right? Trade is just a platform. The view among a lot of Chinese is whether or not they agree with how Xi is dealing with the trade war, is that this is part of a larger US plan to contain China. I really don't see a deal happening anytime soon. Trump wants to get a deal that shows he is tough on China and that he can position as an absolute win. And this is the deal that the Chinese cannot make. Until such time that this changes, I really don't see both sides reaching an agreement.
Right. Thank you, Danson. Take care out there.
Thanks, Lo.
Next, we are joined by Vikram Khanna, Associate Editor at the Straits Times, to give us a sense of the economic ripple effect in Asia of these trade wars. Vikram, good to see you.
Good to see you, Nirmal.
So, Vikram, how is Singapore feeling the impact of the US-China trade war specifically?
I think the Singapore economy has taken a body blow from this. As the trade war has progressed, the Singapore's estimate for economic growth has been reduced progressively. So we started the year with an estimate of 1.5 to 3.5% for this year. Then in May, it was reduced to 1.5 to 2.5. And in August, earlier this month, it was reduced to 0 to 1%. So it's been a progressive reduction in what we are projecting our growth to be. And most of the damage has been borne by the manufacturing sector, which has contracted already more than 2 quarters successively. So the manufacturing is already in recession. And last quarter, that's the quarter 2, the economy contracted by 3.3%. So the jury is out as to whether we're going to have another quarter of contraction, which means Singapore will be in technical recession. Within manufacturing, most of the damage has been done in the electronics segment. Singapore's electronics sector has taken a sort of hit by a triple whammy. You've had the slowdown in China, you've had a weak electronic cycle, and then you have the trade war, which makes everything worse. So electronic shipments in June went down by almost 1/3. So it's a pretty bad situation for the manufacturing sector. It hasn't really spread very far into the service sector yet. So some parts of the economy are still holding up, like construction, financial services, transport, communications, all that. But we are still wondering here whether we're going to go into recession. But recession or not, is going to be a tough year for Singapore.
And more broadly, around the region?
Pretty much all of them have seen declines in exports this year, and especially in their exports to China. So Japan, Korea, Malaysia, Thailand, Singapore, India, all of these countries have seen declines in their exports, which suggests that the trade war is affecting pretty much everybody. The one exception is Vietnam. The people ask who is winning the US-China trade war, and the answer is Vietnam. Vietnam's the only country where exports have gone up significantly, and especially to the US. Vietnam's exports to the US in the first quarter are up by like 30%. And that's pretty much going to be the trend for the rest of the year, it looks like. So Vietnam is a beneficiary, but most other Asian countries have been losing out.
So how are companies adapting as they are caught in the spokes? Are we seeing the decoupling from China and the diversification of supply chains away from China to a significant degree? I mean, we know it is happening. You just mentioned Vietnam, but how significant is it broadly?
Well, there are no reliable numbers on how much trade diversion has happened purely because of the trade war. Some trade diversion was happening anyway, even before the trade war started. For example, so labor-intensive products like apparel, textiles, footwear, and so on were already moving out of China. But there are some sort of imperfect proxy variables we can look at. One is the imports. China's imports have fallen. Now that suggests, now that could be because of the slowdown in China, but it also could be because of people are splintering supply chains. That means countries are not exporting into China as part of the supply chain. They are exporting directly to the US. And it's significant also that China's exports to the US have fallen a lot this year so far, whereas a lot of countries' exports to the US, I mentioned Vietnam, but there are also others, exports to the US have gone up. So India's exports to the US have gone up, Thailand's exports to the US have gone up. So this says that basically countries are not going via China to export. They're not going through those supply chains. Anecdotally, there's a lot of evidence that supply chains have been shifting. So for example, you have companies like Nintendo, Sharp, Samsung, who are producing, smartphones, TV, game consoles, printers, PCs in Vietnam now. So you're going to have made in Vietnam Samsung smartphones. Then you have companies like Ricoh moving the production of printers to China. Some companies producing, say, diesel pumps and auto parts are moving to India, Thailand, and Mexico. So you have all this, you have these accounts of these companies shifting their production. But it's not a smooth or easy process because, I mean, if you're running a factory in China for many years, and you've had a whole lot of suppliers already organized in China, and then suddenly you have to run around Asia looking for alternatives. And you might find that some things are all right. So Vietnam has got some of that investment, but other things are not. Like, for example, you may not have good infrastructure, or you may not have the right skills, or you may not have even enough labor. For Vietnam right now has a labor shortage, for example. They can't absorb very much more investment. India has the skills and India has low labor costs, but India doesn't have infrastructure that's up to scratch, and so on. So it's a very messy and difficult process for companies to do this. A lot of companies have just given up and said, all right, we'll just continue manufacturing in China. We'll just have to live with the tariffs, and that means American consumers and American producers are going to have to pay more.
Interesting. So where does this end? Or if that is too much of a stretch, how do you see this playing out from your perch in Singapore?
Well, I don't see this. I mean, I think Danson spoke on this issue. I don't see this ending anytime soon. Certainly not before the 2020 U.S. election, and probably even after that. I mean, it's significant that even the Democrats in the U.S. are China hawks, and the whole idea of taking on China on trade issues seems to resonate politically in the U.S. And as you mentioned earlier, it's about more than just trade. So I think this is going to go on and on for years to come. You might get mini deals here and there, but I do not think you're going to get a comprehensive deal because the positions of the two countries are just so far apart. They can't agree on the most basic things. They can't agree on the meaning of reciprocity. They can't agree on the legitimacy of industrial policy. China will not agree to codify a lot of the changes that the U.S. is demanding into law. And so it's very difficult to even imagine a sort of comprehensive deal. But you'll have mini deals and you'll have truces that are announced and then broken, like we've seen. We've lost count of how many truces have been broken. So unfortunately, I don't see an end to this at all. Not yet.
Yeah, unfortunately, I agree with you as well. That's quite a widespread view in this town, too, among analysts and experts. Thank you, Vikram. It's great seeing you again.
Thank you, Nirmal.
So in the short term, the issue is how long will this trade war continue, and will there be some relief, enough relief, and soon enough to restore confidence and head off the worst consequences. But in the long term, the strategic contest between China and the US, at least under President Trump, is very likely not going to go away, even if there are some agreements here and there. Remember, apart from the reality of great power competition, at home it also suits President Trump to show his base that he is out there in the trenches fighting for America. But the line he walks will become increasingly thinner because, unlike President Xi Jinping, President Trump faces an election. As ever, the conversation has only just begun on the Asian Insider. Do drop us a comment below to tell us your take on this issue, and we look forward to your company in the weeks to come. Till next time, this is Nirmal Ghosh signing off.